Welcome to our YouTube channel. In today's video we want to discuss the possibility of central banks shifting away from targeting inflation by using interest rates. Recently, the Reserve Banking of Australia's review opened the door for potential changes of this nature. Some leading economists are advocating for the idea of targeting a nominal income, that is, an income that is not adjusted for inflation, instead. So what exactly would this mean? The Reserve Banking of Australia's review recently found that targeting income, or setting a goal for how fast the economy should grow in raw terms, may perform as well or better than aiming for an inflation outcome. Nominal income fluctuates less in response to temporary supply shocks than does consumer price inflation, so monetary policy may react less to temporary supply shocks under a nominal income target. However, the review found that the bulk of its consultations supported the flexible inflation target framework because it had performed well and was understood by the public. Essentially, people were familiar with the conventional inflation goal, and at this stage, it didn't find sufficient evidence to support a switch to an alternative framework. Renee Fry MC Kibben, one of the review panelists, recently noted that central banks would probably have responded differently to the supply shocks generated by the COVID disruptions and Russia's war on Ukraine if they had been targeting a nominal income rather than inflation. She pointed to the example of a flood or bushfire disrupting supplies, which would likely affect prices but not necessarily nominal income. With inflation-based targets, central banks may be inclined to tighten monetary policy in such events, when in actual fact, the opposite might prove to be more beneficial. Fry MC Kibben's husband and fellow economics professor at the Australian National University, Warwick McKibben, stated that the RBA review was right to prioritize governance improvements within the central bank as opposed to replacing its target. It is likely that such reforms will be examined in future reviews. So, to conclude, the Reserve Banking of Australia review has opened a potential door for the use of monetary policy to target nominal income instead of inflation. By reducing a central bank's susceptibility to external shocks, such a system could prove to be more beneficial and resilient in this ever-changing environment. Ultimately though, it remains to be seen whether any such changes will come to be. Thank you for watching and be sure to stay tuned for our next video.